Welcome to the Art of Uncovering Alternative Finance Options. My name is Latoya Smith. I'll be your moderator for this morning. I'm the CEO of Brass City Media. We're a storytelling and video production company based in Brooklyn, New York. And today I have two panelists who are going to share some resources so that you walk away from this panel with a better understanding of how to find financing you need to grow your business. So we all need some money, right? Sounds good? All right, I got an amen over there. So I'll start with Justin Fobbs to my far right. He is the executive director of Veris Capital, which helps businesses throughout the country obtain working and growth capital for their businesses. And then I have Mr. Willie Woods, who is the president and managing director of ICV Partners. ICV is a private equity firm that focuses on lower middle market companies. And ICV has $1.4 billion in capital under management. And they are also the 2019 Financial Services Company of the Year. So let's give it up for both of our panelists. And just some quick housekeeping. So Mr. Woods can't be here tonight to receive his honor, so we're going to make sure that we present him with his award today. So I'm going to talk to the panelists for about 20 minutes, give you all 10 minutes for Q&A, and then we'll have the CEO of Black Enterprise come and present Mr. Woods with his award. So please stick around for that, okay? So let's jump in. Jason, I'd like to start with you. So we know the 2008 financial crisis devastated a lot of small and medium-sized businesses, particularly when it came to their ability to get capital and borrow money. But that massive gap in available capital led to some disruptive changes in the finance industry, and it made the way for new players like Veris Capital, which is a good thing for you. So can you talk a little bit about what you all do and how you help businesses obtain capital to grow their businesses?
Absolutely. So Veris Capital is a small business and commercial lending company based out of Mooresville, North Carolina. It's about 30 minutes north here of Charlotte. So like you said, with that crisis that happened in 2008, everyone knows that the bank's lending has tightened up quite a bit, a lot of regulation behind it. We found an opportunity where we were able to introduce products to a lot of small business owners that you necessarily wouldn't get in the bank. Everyone knows, or mainly most consumers, when they're looking for a business loan, they go into the bank that they personally bank with. And most of the time, the bank has a certain criteria that most consumers wouldn't know about and think that's their only option. Well, we deal with a lot of hedge funds, a lot of private equity firms, a lot of other commercial lending institutions, as well as some of our own funds. We're able to put together certain product sets for small business customers, real estate investors, that it's not a one-size-fits-all approach. It's very custom tailored. Let's say if you have some credit struggles or you've been in business for less than 2 years, well, we can find a home for you and get you financed. So we've been pretty successful in doing that, and we've helped out a lot of small businesses throughout the country over the past few years.
And how do some of those businesses assess when they need funding, and how do they determine how much they need?
That's a good question. Unfortunately, what happens is with a lot of small businesses, they tend to look for financing at the wrong times, right? So it's in those dire moments, let's say payroll, or there's a project that just came up, and it makes it a little bit harder. There may be some cash flow restrictions, revenues may have dipped a little bit. I think the best time for a business to look for financing is typically in those stages where business is thriving. Those numbers are strong, you kind of forecast and kind of protect your nest egg for the future. One of the big things that I recommend for a lot of our clients is a working capital line of credit, just because you never know for those what-if moments. It's a line of credit that sits in the back pocket. You use it when you need it. You're not penalized, you're not charged for it right then and there. You have a project that comes up or something that happens, guess what? You can tap into it and have some growth or working capital for your business.
Okay, so working capital, that's one way to grow your business. But another way to grow it is perhaps partnering with a private equity firm. So Mr. Woods, can you walk our audience through what those transactions look like and the ways you partner with companies to help take them to the next level?
Sure. So typically when somebody is approaching us, they're thinking about transitioning, whether that be bringing in a partner like us because they see a huge opportunity for their business to expand. That could be expand into a different market, different geography. It could be that they've been in the business 25, 30 years and want to take some chips off the table, but yet want to remain active in the business. They could have a child in the business who they want to see transition into the leadership of the business, and we can help facilitate that. But normally it is a situation where there is a big transition that's happening.
And what type of industries do you usually look?
Yeah, so for us, we've been around for almost 2 decades. We've invested in 23 companies over those 2 decades, and we've done 25 add-on acquisitions with those companies. Because a lot of companies we tend to buy other companies to add and grow and help grow that company. We're focused on 4 core industries: business services, food, consumer products, and healthcare are the 3 industries where we spend our time.
And of those industries, what makes them attractive? When you see a company, how do you know that that is a good fit for ICV?
Yeah, and so 20 years ago when we started ICV, we developed what we call the ICV box, the ICV investment philosophy. Like, what makes a good ICV deal? So we look for 3 things to start. First, we look at the industry and determine if it's a good industry or not. And good industry is defined as an industry that's stable to growing, that's got good demand conditions, good tailwinds, that's driving that industry, that you can look and see where the growth is going to be coming from. So a good industry is the first criteria. The second criteria is market leadership in your business niche. If you are the market leader in your niche, that means that you must be doing something special, right? Because that means you dominate the space you're in, you have more customers than everybody else. And our assumption is that that's the case, there must be something unique and special about your company that allow you to be able to have that dominant position in your market. And then third, we look for margins, high margins relative to where the industry might be. Our view is that if your business demonstrates high margins, you must be doing something special, because that means that either you have a competitive or better than competitive cost structure. That means you're able to charge a premium price because of the service offering or the product you're offering commands that. And a lot of that you can see typically in companies' margins. And then the last criteria, probably the most important, is management. We want to partner with a CEO in particular who we feel is driven, has vision, passion, and is willing to invest their own capital alongside of us, and somebody who's proven. Because management is probably one of the most important things that we consider when we're making an investment.
Absolutely. And Jason, what do you look for? How does a business position themselves, or how do they improve their chances of actually getting funding with Veris?
So we look at a number of parameters. I think the most important for us, they call them the 4 C's: cash flow, credit, character, and collateral. We can make a case if there's a shortfall. We can find other mitigants to kind of prop the business up. As long as the business has been profitable, we can look at businesses as young as 6 months. We can deal with challenged credit. We have a pretty extensive product base and can get some creative financing done for a lot of businesses throughout the country.
And as I'm talking to a lot of small business owners, there's a lot of misconceptions about alternative financing. What would you say are some of the biggest areas that you have to educate folks on if they don't want to go the traditional bank route about how to get money from an alternative lender?
I think some of the biggest misconceptions are that you have to have perfect credit. You have to be in business for 2 years. I think that the Small Business Administration, the SBA, is a great product. We have a great service, especially for minority-owned and women businesses that we partner with, that we've been able to help provide capital for debt restructuring, growth, whether you've been in business for a year, 2 years, and we've done it with less than perfect credit. I think also that another misconception is that people feel that you have to go to your local bank or you have to go to a bank. There's a number of alternatives out there, and we just try to help our customers to put them in a better position and give them the knowledge that they have options.
Now, you have some examples of companies on your website who you've done business with. We have so many different companies in the audience, from food to healthcare to construction, professional services, financial services. Can you give an example of a company that you worked with, maybe what type of funding they needed and what that process was like?
Absolutely. So we're working right now with a home healthcare business who's currently acquiring 3 properties that they're going to put in patients that are going to live there, pay rent. Also looking for working capital, and we're doing a debt restructure, which totals out to be a $3.5 million facility that's actually closing today. Credit was a little challenged, but the cash flow was strong. They have a track record, good management's in place, which is also important, and he knows the industry. So someone like that, we can make a case for and get behind.
Hey, Mr. Woods, I want to backtrack. During our call, we talked a lot about education, and it's really important to help folks understand what it is private equity companies do. But I want you to explain, why did you all choose to focus in lower middle market companies, and exactly what does that mean in terms of revenue numbers that you look for in companies?
Yeah, and so we made a decision, years and years ago that we would really focus on the lower middle market. We define, and a lot of people define lower middle market revenue-wise as sort of 25 million up to 150 million, call it, and cash flow from 5 million to 30 million. For us, it's 10 million to 30 million is where we define it. And we thought that's where the greatest opportunity was for a number of reasons. First of all, there's just a lot of businesses and a lot of small businesses in this country, right, that need help. Second, there's an opportunity, right, to professionalize and bring the common business practice tools to these kinds of businesses, some sophistication that may not have existed as these businesses have been developing themselves. And because we've been doing this for so long, we just have a good sense of what best practice is. So whether it be sales and marketing best practice or information technology best practice, or what's the best practice for growing a product or growing a market or expanding into a different distribution channel, and we have seen a lot, and we believe we can bring a lot of that type of knowledge to a much smaller business than a larger business. And then frankly, the third reason is, if you get it right, meaning you get the small business or the lower middle market company right, and you successfully grow it, people will pay you a premium for that, right? And so if you bought the business at 5 times, and if you've doubled it, you can typically sell it for 8, 9 times, right? And so the valuation multiple, as we call it, valuation multiple expansion opportunity exists in this part of the market.
And, well, you have some misconceptions in your industry as well. A lot of times folks think that when a private equity company comes in, maybe that automatically means the CEO is going to get fired. Let's kind of dispel some of those myths.
Yeah, there are a lot of misconceptions.
Yeah.
And I think the toughest challenge with finding private equity money is finding the right money and getting yourself educated, right? Because there are all different types of private equity investors, right? There are growth private equity investors. There is private equity investors like me who focused on middle market. There are big private equity investors. There are mezzanine private equity investors. And then there are industry-focused private equity investors. You heard what I focus on. And it's just figuring out who is the right private equity firm for what you're trying to do, right? And so if you're in the healthcare space, then you should find a private equity firm that focuses on healthcare, because they are going to have the knowledge, they're going to know your business, and they're going to understand what you need. If you're small, right, then you need to find a private equity firm that's focused on doing small companies, right, who appreciate what a small company does. And then there are all different models, right? There are some private equities firms that got an existing CEO in their network, and that's who's going to run the company if they buy it. And so they're CEO-centric, as we call them. And so they buy your company, they bring a CEO because they've been studying an industry, and you just got to know that that's what you're dealing with, if that's what you're thinking. A lot of those situations, people are cashing out. Then there are private equity firms like us who support the existing CEO. Our motto is all about supporting the existing manager, getting behind that manager, and helping them develop and grow their business. And for us, if we can't get comfortable with the CEO, it's not a deal we would do. And then there are all kinds of people in between, right, who bring their own people to augment the CEO on a board level, but not at the operating level. And so the trick is, finding the right private equity firm that kind of fit your situation.
So can we dig into that a little bit more? So yes, part of it is finding the right company, but is there a series of questions or a checklist if I'm a company and a private equity firm approaches me, what are the steps that I go through to make sure that you're the right fit? Or what are the questions I should ask?
Right. The first question you got to ask yourself, and this is certainly common, among this market and among us, it's cultural, right? You got to cross the line about the ownership, right? I mean, there's always this misconception that I don't want to sell any ownership, or I'm not going to give up my company, right? Well, the day you decide you want a private equity investor, you got to cross that. You got to just take that off the table. If you stuck there, then you should go see my friend here, right? But if you decide you need private equity money, the ownership thing, you've decided you're going to cross that line, because what you believe is the capital you will get from a private equity firm will just catapult your business at a level that you could never do by yourself at a faster time period, and that the pie will be so much bigger that whatever you had to give up in ownership will be well worth it, right? And I mean, there are hundreds of private equity transactions done yearly, hundreds. So there are a lot of people who've long crossed that threshold outside of our culture, right? The other culture, they get this, right? That's just not even something they think about. They think about, I need the capital, right? And that's going to get me to here. And when I do the math, I'm going to be worth 10x what I was worth before I took the capital. So you got to cross that threshold. And then once you cross that threshold, then you've got to start, whatever industry you in, you got to start trying to figure out, I want somebody who knows something about my industry, somebody who can bring more than just money. They can bring relationships, customer relationships. They can bring best practices. They can bring some insight about the industry. Like, you got to start thinking about, you want somebody like that. And then third, right, which is, again, very important, is you got to be with somebody you like, right? Life is too short to be out here with people who are assholes or difficult to deal with, which is kind of the reputation that a lot of private equity firms have. I would say that's half the industry, and half the industry is not like that. But finding a group where you have good chemistry with, where there is a natural, likeness for the people, that makes a big difference, right? Because nothing goes perfect in a private equity deal, right? Everybody seems to, in the end, when you exit the company and everybody made a lot of money, everybody think everything does this, right? And the reality is everything does this. There are ups and downs all the way to the finish line. And when the down moment happens, that's where the personality and the relationship and the chemistry comes into play, right? Because then people don't panic, people take deep breaths, and we work it out together, and we ultimately find a solution to get past that downturn. People don't get trigger happy and start firing everybody. That's making sure that you found the right partner where the chemistry is right to get through those moments. So those will be the three things I would be
No,
focused
that's really good. I'm glad now they have a framework of how to prepare for that conversation. And even in terms of getting alternative financing, are there any entrepreneurs in the room who have gone to your bank and tried to get money for a loan or a line of credit and you were denied? Anybody? Okay, so, statistics show that about 80% of those bank loans are denied. Over at Veris, what's the approval rate for alternative loans?
Roughly about 89%.
89%. Excellent, excellent. So I know that we have to wrap up. As I said, we only had a short period for our discussion, but I do want to take some questions from the audience. I'm pretty sure you have a lot of questions. So there's 2 microphones in the aisle, so if you can just step up to the mic. And while they're coming, if you all have any parting words or any last-minute pieces of advice that you want to share, if anything that I didn't ask you that you want to add, while they're coming to the microphones?
Yeah, I would say this. The other joy of my job is I meet entrepreneurs all the time, right? Like you, people like you. And it takes a lot of patience to do what you do, right? Things don't happen overnight. And when I meet some of these entrepreneurs, it's like they started something 15, 20 years ago, and they just now got it to a certain level. And they're no smarter than nobody else, right? Which is interesting, right? It's just they were in the right place at the right time. They did have some vision, and they were willing to take risk. And so it happens all the time. And then they meet me, and then we buy their company. And I'm thinking about one situation now where we're looking at, and these people stumbled into a food situation about 25 years ago. They did a nice job of growing it, and I think we valued this business at like $160 million. They're leaving up $30 million in our deal, so they still, among 4 of them, going to take $130 million home, right? And so I just say that to say you just got to hang in there. It's not going to happen overnight. And then you just got to make all the right calls and continue to plot it along and think about, how you monetize all of that, years later, because it's happening all the time.
Yeah, if it ends like that, I'm ready for it. So I'll take this first question over here to my left.
So this question is Spencer Disher. I do a lot of work with angel investing, Charlotte Angel Fund. But my question is, on the investor side, are there opportunities for accredited investors to participate in a private equity firm? In other words, can on the other side, now that you've done okay, can you actually make investments through a private equity where the returns might be a little bit higher than, say, standard stock and bond portfolios?
Yes, the answer is yes. And there is a bunch of criteria around being an accredited investor. So that's got nothing to do with us. That's got something to do with, the government and who qualifies. But the answer is yes. So in our fund, every one of our CEOs, we offer that opportunity to people who we've invested with, who we've had a lot of success with. And just about every one of them take us up on it. And so we have a lot of our ex-CEOs, CFOs, board of director members who have invested. And we don't even care what the amount is because we offer it up as a benefit, right? So we have people in as low as $100,000 and as high as $5 million.
Right, next question.
Yes, good morning. Thank you both for your time and for your expertise. My question is, so right now I'm a small business of one, and I have an LLC, and I provide professional consulting services around leadership management, organizational development, strategy, and planning. I'm looking to grow into moving from contract to contract with agencies into some small business financing, and how do I think about even having those conversations, and with whom should I be having those conversations?
Yeah, and that's a great question. It's something that we come across very often. I think that your golden ticket is the fact that you have those contracts. Those contracts translate into dollars, and that's something that can be monetized. We've had a number of transactions where we looked at contracts before and were able to lend against those. And even the Small Business Administration is a good resource as well, along with the CDC, to help kind of move you along, and we have contacts and resources that will work with you at the same time alongside the SBA.
Hello, my name is Earl Wise. So I'm tasked with doing about $10 million worth of brokerage on the healthcare side every year, as well as I own a real estate company where we do everything from flip, I own apartments and things like that, and scaling up to 100, 200 units. So my question to the panel is, how do we secure funding in a downturn? In today's market, it's very easy to get funding. So my $1, $2, $3, $5 million is the same as somebody else $1, $2, $3, $5 million. But in the future, when the market turns down, how we're able to build relationships with you all's company to be able to get funded in the down market, where we, expand our net worth from 1 to 5 to 20 million or $100 million person.
Yeah, so in our industry, I think that whether it's a good market or a bad market, we have relationship with banks, we have relationships outside of that, even internally, where we look at, especially on the real estate side, against collateral. So if the collateral, if there's value there, we'll work something out and make a deal, whether it's against the portfolio. We have products where it can be a line of credit solely just based off the property. If you have equity in that we can pull out, we can get very creative regardless of how the market's currently performing based off the overall portfolio.
Yeah, I mean, our best deals have happened in the downturn, frankly, right? That's when we double down and spend a lot of time trying to find the right opportunities. And because if you can execute and get something done in a downturn, because in theory, right, that means earnings is depressed and the environment is not that good. That is the best time to be active. Because when the market comes back, the business sort of rises up with the rest of the market. So people who are on the private equity side see the downturn as an opportunity.
Thank you.
Good. Well, thank you, Jason and Willie. We got a look at alternative finance options, how private equity firms work. I think the folks walked away a lot more educated. I know, like I said, that's what we spent a lot of time talking about, just making sure people have a thorough understanding of what it is that you do. And now it gives me great pleasure to welcome the president and the CEO of Black Enterprise, Earl Butchgraves Jr., to the stage to make a special presentation. Let's give him a round of applause and a round for our panelists.
Thank you, LaToya. Did you guys enjoy that session? Yes. So, as you know, this is our 24th year of our Entrepreneurs Summit, which is now called Forward. But every year at our summit, part of the final evening is honoring the best of, if you will, and we do the best of Black-owned businesses, both at the larger businesses, the BE 100s, as well as our Small Business Awards, as we call them, because we want to get people along the cycle. So I want to read something to you all, and then we want to do a special awards recognition this evening. As you know, each year Black Enterprise reports on the state of Black business in the U.S., highlighting the achievements of dauntless entrepreneurs and their phenomenal prowess in building sustainable enterprises. When it comes to the BE 100s, our nation's largest Black-owned businesses, we have the privilege of making our annual salute to the best of the best. And at this time, I'd like to take the opportunity to recognize such a company among the ranks of our largest Black-owned financial service firms. On behalf of Black Enterprise, it is my privilege to honor an entrepreneur and a company that has displayed business excellence, broken new ground, and helped expand the pipeline of a diverse professional in the financial service arena for more than 20 years. In a sector that has often excluded and overlooked African American talent, they have not only demonstrated staying power, but soared to new heights. And I am talking today about today's panelist, Willie Woods, and his private equity firm, ICV Partners. ICV Partners is our 2019 BE Financial Services Company of the Year. And let me share a little bit more about ICV and why it is deserving of this award. With $1.4 billion in capital under management, ICB has acquired controlling interest in close to 20 lower middle market companies in sectors as diverse as healthcare, food production, and business services. And under Willie's leadership, the firm recently achieved its largest fundraising ever by gaining $585 million in committed capital for its fourth fund. At the same time, it has successfully recruited African-American Wall Street professionals and top-notch corporate managers to maximize the value of portfolio companies to produce stellar returns for its investors. And throughout the years, it has grown by adhering to its 4 core values, known as the 4 H's: honest, humble, hungry, and hardworking. And Willie is a great example of each of those tenets. He's a long-time Wall Street veteran, a professional mentor and philanthropist, and he serves on the board of the Apollo Theater Foundation and chairman of the board of trustees of Morehouse College, his beloved alma mater. Please join me. Well, before I do that, let me say to Willie and to the great people at ICB Partners, and Willie was kind enough, he's got an event that he has to go to this evening, but he insisted upon coming and wanting to be a part of this Forward conference. He's an extraordinarily busy man, but he's done this and he wants to share with, or has shared with you, much of the insights as what has grown his business to what it is. So please join me as I present Mr. Willie Woods and ICB Partners, our highest honor for entrepreneurial achievement within the sector, as our BE Financial Services Company of the Year.
Thank you, Butch. I mean, it's really amazing, right, for me at least, right? I grew up with Black Enterprise on my coffee table for years and years, thumbing through the pages to see what brothers was being so successful and who made the top BE 100 list. And I'm from the Detroit area, and there will always be a lot of Detroit brothers on there that I would know. And so certainly this is an honor for me to now actually be one of those people, right, that I used to read about all the time when I was younger. And so I want to thank Black Enterprise for all the work they do to tell our story, right? Because if they didn't tell the story, we all know the Wall Street Journal and everybody else would not be telling these stories. And I'm just happy that they continue to do this important work and sharing all of these great business stories and financial management stories and wealth building stories, because God knows we all need it. And so thank you, Butch. Thank you, Black Enterprise, for this honor. It is much appreciated and cherished.
Let's give him a round of applause again, Mr. Willie Woods, our 2019 Financial Services Company of the Year. I'm going to let LaToya, I'm going to let you close out, but I do want to say, and I don't want to bring short shrift to this, but being the BE 100 Financial Services Company of the Year is truly, truly a unique honor, but not just because it's an honor, but it's a very, very challenging thing to do, right? And understand that this brother has to go out here and raise money from people who do not want to give you the money to raise, right? And if the hue of his skin was different, right, he'd have $25 billion under management, not $1.4 billion under management. So he has to be that much better, that much more extraordinary to be able to raise the money he has been able to raise, to put that money to use in companies like yourselves. And so you can become anything you want to be, right? My father used to say to me all the time, don't focus on racism, that's a given. Right, focus on what it is that you can be. And this young man, I call him a young man, but he ain't a young man, but he's an older man now. But this young man has done an extraordinary job. And so, Willie, to you and ICB Partners, congratulations once again.
No, thank you.
All right, amateur hour for Butch.
Thanks again, Butch. So that is our panel on alternative finance options. Mr. Woods will stick around for a couple of minutes. Jason will be here for a couple more minutes. So if you did not get to ask a question, please feel free to come up afterwards. And again, enjoy the rest of the conference, and thank you all for coming. Have a good evening.